Hello traders, welcome to today's weekly commentary. In today's weekly commentary, there are three major things we'll be doing. One is outlook and review as one. Then the second is code report, and the third will be point of interest and how I marked out my point of interest. Just kind of like a detailed explanation of what I'm doing. All right, so let's get back to the chart. Here we have a BTC USDT or BTC USD. So market here, first, it broke structure to the upside right here. Now, as market broke this structure, so the first thing now we have to understand after market broke this structure, that if continuation with strength, right? With strength. So this shows shift in momentum. So that means momentum have now go back to the buyers. So initially it was to the sellers, right here. You can see it right here. A sharp down movement, then little movement to the upside. Then this right here is what signifies a bullish order flow. All right, so that means the storyline has now changed from bearish to a bullish storyline or a bullish order flow. So we'll be looking for a buy program. So one of the things I'll be expecting from BTC is, if possible, since market did not this little high right here, since market did not engulf it, so I expect maybe short-term pullback. If confirmation is given, then we'll look for buy from this imbalance, make at least get to this last mitigation right here. So this resistance right here is our daily last mitigation. So for market to get to that particular mitigation. So, but before market get to that mitigation, which can take, let's say, more than a week, right? So the first thing now we should just understand is what, where is our nearest mitigation? Our nearest mitigation is price right here, right? This is our nearest mitigation, which will be first getting before we talk about this. So this is our next major structure. Now we go back to good. So on good, we have market grabbing liquidity right here. A clear liquidity grab right here. So the next thing I expect of market is what, a bullish expansion, and which market did on Friday. So market used liquidity bull structure on 1 hour time frame right here. Now we're having what, rejection from this resistance level, or from this close of this bullish, the open this bullish candle, or the close of the bearish candle before market transition to this buy candles, right? So we can see it on 1 hour frame here. So this is what buy. So Monday, I'll look for the confirmation, then I'll look for the buy continuation, the upside. So one of the major target we target first is what, this liquidity, this high right here. So this will be my first target. After that, then this inducement low right here. So this will be my next target for the week. Now that is just my major expectation on this pair. Now we look at before that. So this was the first entry I got. Let's use this was the first entry I got right here. Market broke structure to the upside. I trace right here and give a buy program. A community also give them this POI for a buy program. All right. So for a buy program, market with the first target was this. The second target was around this buy right here. So that was the second target. So after market got to the first target, it came back and retraced down. And I also had this point of interest, though I didn't mark it for them out. I also had this point of interest here and here as my two POI for a buy program. So as market came back to this area, so what I did was what I just scaled into a 5 minutes time frame, wait for break of structure. Right here, market broke this structure. And what I was looking for is simply two things. First, a break of structure. Another thing is what, momentum change. So there was what, strength in this bias, in this shelf right here, and there is also strength this buyer right here. So this shows what, a transition from what, sell program to what, a buy program. So which is what market is using. Okay, so this is another buy program. Now we also have another major view on Euro USD. So this is one of the view I have. Market broke structure here to the upside. On daily time frame, we can see the market engulfed this high. So this shows a clear engulfing. So anything that makes market to break this low, all right, especially break it with body, right, on this daily time frame, a signal, though the rejection happened on weekly. All right, the rejection of this high happened weekly. So this thing that makes market to break it, to break that low, to look for a bearish expansion. All right, or look for bearish expansion. So right here we have liquidity gathering around here. So if liquidity gathering around here, so that tells us two things. All right, so that means we are expecting market to drop and drop move into this area. If market give us the confirmation, we'll look forward buy program from here. But if market did not give us the buy program, then if market break below this low with engulfing, then we look forward a sell program. Because on a normal time frame, this right here is a short break of structure that can signal sell program. All right. But since market is yet to break this major low, all right, since market is yet to break this major low, and fundamental analysis is not yet supporting the sellers. So that is why I'm still rooting for buyers. So I'm still expecting buy expansion. So that is why once if as market did this and fundamental analysis is supporting the sellers, then I would have expected short-term pullback the upside. Market will grab this low as liquidity at the same time go through this point of interest as the strong bearish expansion. So that is my view on Pro USD. Now we have BBB USD. From last week, I gave an outlook. We'll be looking for a buy program. That market will continue buying from here, or market will come back to this area before we buy. So later on, that market gave us this buy program that was on Sunday/Monday. It gave us a tracement coming back to this area, which is valid point of interest we marked. So we have these two POI that we are monitoring for this week for a buy continuation. So my expectation is this. So since fundamental analysis is still supporting the buyers, I'm expecting market to give us a little retracement right here and buy expansion outside this particular zone. That's my first view. Another of my view is if we get to this area, give us a pullback, engulfing, then we'll see a higher highs in price. We can see higher highs in price. So that is very, very possible also. Because when you look at it from this daily time frame, you understand that market would trade into the support level, reject that support level, now is pushing higher. So until market now show us more momentum that it will continue buying, this area, this point of interest is still valid. So this point of interest is from 4-hour time frame void in a week. On this time frame, it become a candle. All right. So here we have imbalance. That's the first thing. Now, the reason why I mark this point of interest is this. The first thing I did was this. The last structure mitigation was this. It grabbed internal structure right here. So making this structure a strong POI, right? Strong POI. So if you didn't grab this POI, since it's obvious of interest, I would have taken it to be liquidity grab. I would have marked my POI just right above it. I would have marked this, but it grabbed this liquidity here. So that is why I did as POI. That's the first thing you have to understand right there. Another reason I picked it is we have a resistance level right here. So that is the of this sell candle or the close of this other sell candle as your support resistance level. Then we have this long wick right here, just like this long wick right here also. So this long wick right here is considered to be a strong wick. So when you scale into lower time frame within that area, within that long wick, you understand that within that area, okay, let's use 5 minutes time frame. See that if that is the time frame. Okay. So on this time frame, from that 4-hour time frame, we'll come back to this time frame, has little balance within that area, which is this. All right. Now, understand, I'm not kind of refining my POI. If I'm refining my POI, most of the times you will notice I don't refine that much again. But if I'm refining my POI, this would have been my initial point of interest. Now, the reason why I will add this little gap right here is because of mitigation. Right, this here did not mitigate this, so I can't kind of like mark this area now as a POI or as one POI, mark this as a one POI. Then at the same time, all right, at the same time, mark this also as a POI. It's too close. So what I do most of the times is, if I have it like this, I'll just have my POI like this. So if there was a complete mitigation, then right here, if there was a complete mitigation, I wouldn't have added this up here. It would have been just this and this imbalance right here. This would have been what refined POI this zone. All right. So when you look at it from the higher time frame, if we look exactly like this, all right, this will be the refined POI of that particular zone. So we can leave it like that, but at the same time, have it in mind that within this week, still work on mitigation. So that is that. So right here, that is the reason I'm expecting that area to hold because it's a void in a week on 4-hour time frame. At the same time, when scaling to lower time frame, you will see the void, which is imbalance lower time frame. That's why we call it void in a week. Now, another POI I use is this. That POI uses what C candle or unmitigated zone. So when you look at this zone right here, where market bought currently, where market is buying currently from, when you look at it, this low and this high did not mitigate each other. So let me zoom in a little for you to see. So right here, this low, this high did not mitigate each other, making this zone right here a strong point of what interest, a strong point of interest. So you can pick the whole of this candle as your POI, but when you go to lower time frame to refine it, you will have it just like the one marked right there, and that is where market and currently. So that is what a good zone. The same thing right here. This is kind of like what unmitigated, the last unmitigated zone. So right here you have it as what POI. Now another reason, another way you can mark out your POI, which I also use, is what the last structural break or the last low market broke. So right here, this is the low that market broke, the last low that market broke. So this right here will be your POI or your, this can be your liquidity low, right? Because it's a liquidity or inducement low, right? Then this low right here is called QML low, Quasimodo low. So this area now can be your point of interest for a buy, or if you don't want to refine it on lower time frame based on mitigation. So you can use this on higher time frame without going to lower time frame to refine your zone like this as your point of interest. But if you refine it on your lower time frame, it'll be a little bit wider compared to when you're using Quasimodo level. But the main thing is this: there are sometimes if you refine it, market will just come in that last mitigated zone, especially if there's two mitigated or mitigation around here. Market can just tap the first one, then give a reaction and continue laying to the upside. So when you are waiting for that Quasimodo to miss the entry. So this is another point of interest monitoring on GBP USD. And right here, the reason why I consider this structure range to be what a major structure range, because one is that market broke this high right here, engulf it. This little high right here was not engulfed, making this low what a weak low. So market can what it out easily fit into this major structural range for bullish expansion. So that's one of the major zone I have at right there. So the same thing right here, there was no unmitigation right here. The last unmitigation right here, this Quasimodo. This is why I pick this point of interest. It's my what? My POI. Then here we have what? Resistance level, all right? Resistance level, that is the close of this bearish candle before market transition to this buy candles, all right? So the close of this bearish candle right here, that's my Quasimodo level. So if I want to do it, it will be like this. But the reason why I do it like that is because I mark this resistance level from daily frame. On daily time frame, you will see it like this. So it from this candle, right? And when scaling to 15 to 4-hour time frame, it will start from here. So you should understand the reason why it's actually start from here instead of here. But if you use what daily time frame, it will be around here. If you use this 4-hour time frame, we just start from here as your support level right there. So which market can right there? You will look for confirmation on lower time frame before I program. So that is that right there. Now on this pair is a little bit tricky. Now the reason why I'm saying it's tricky is because higher time frame market has traded into this void in a week and it's rejecting that here and at the same time also rejecting last week and go high, right? The body failed to engulf it. So this shows that what market can show willingness to go lower, to even take out this last week or last 2 weeks high, I might say. right? Market can show that intensity that it is what is ready to what take out this last 2 weeks high. But nevertheless, on the time frame, we have right here engulfing of this high. So since we have this engulfing of this high, so making this low a proper low, and having that low as a proper low, market came back the support level of it and giving us what a reaction. So if this reaction hold, can give us what a buy program a upside. But if it didn't hold, so for this pair, I will stay out for a while, at least to, except maybe I'm looking forward maybe Monday to close. After Monday close price, if it goes below this low, we know. If not, if it goes above this high, we know. So Monday should what define this particular pair. So that this is one of the major reasons some traders don't trade Monday. So they wait for Monday to define the market. If market would break out from its structural range as a manipulation or as what expansion. All right. If market is going to be expanded to the downside, based on how it break out from that consolidation. Let's take, for example, this structure range. So if market break above this consolidation with what engulfing Monday, then Tuesday can give you another reason that it can what go lower. After Tuesday, if Tuesday decide to reject, then you can now expect maybe retracement. Or if it didn't reject, then you know now I expect it to even trade up well to these imbalances to fill. Right, that is one major thing you have to understand right there. So we'll have another place, USD card. Now, this USD card is kind of like a strong and a good at the same time. Market broke this low right here, which is a clear break of structure to the downside. Market trade into this void in week also from this daily time frame. So when you scale into 4-hour time frame, now you understand that this is what liquidity high, major internal structure, all right, that mitigate this zone, liquidity high. But at the same time, this can also answer a break of structure. This can also answer a break of structure. Now, the reason why it can answer a break of structure is simply this. On weekly time frame, market reject this low. Reject last 2 weeks low by candle. The candle closing bullish. So this shows that what market is showing what it's time for what a bullish expansion, making this what we have series of sell candles right here. Market breaking this high plus engulfing it. That shows that what there's a willingness for price to go higher. But the only reason why having it all that currently is because of what this mitigation that market is offering right here. So it mitigate this area completely, mitigate this completely without leaving any zone mitigated. So that means there's what sign of what proper mitigation known right here by mitigating balance on 1 hour time frame and here. So that shows what market is willing to still go lower. So if it's willing to go lower, there are two zones I'm expecting market to what to trade lower into. One, this support level right here. All right, market trading to this level with this get this low, give a confirmation, then can look for a buy program upside. Another one is right here. We have what liquidity low. All right, liquidity low. That is this candle low. All right, this candle low, which is kind of like CRT high. All right, then making this a CRT low, which is ideal liquidity. So now having that make this low liquidity, making this area from here to here POI. Now, but having that so POI is very, very wide. So what do we do? Scale into what lower time frame, like 1 hour time frame. Sorry, 1 hour time frame to look forward imbalance. So when you come this 1 hour time frame, the first thing that you notice is that market break this little structural range high right here. This candle that broke it did not engulf the high of it. It didn't engulf the high of this. All right, this candle did not engulf this high of this. So making this low, little low, kind of like a small pullback, not a mitigated low. So if this is not mitigated low, that can mean that we only have this area, this imbalance, and this. Okay, but that is also why. So you can scale into maybe lower than that, maybe 30 minutes or 15 minutes time frame. So let's use 15 minutes time frame here. So coming to this 15 minutes time frame, you have this area right here. But this area, based on how I define proportion block, is not a proportion block. So the last proportion block is this little handle right here, which is this. which is this. So if you are to refine your POI, this will make what a persons as the nearest POI plus this support level. So and now you just want to expand this a little bit higher to this support level for this making your POI. But this can only work if you are what in uptrend. But currently we're trying to what counter trend because market is still what bearish trend. All right, it's still in what in a bearish trend, except that it is giving what a weekly rejection of last week candle, and we have gotten what a short-term structure. So that means we are looking for a reaction. Since we are looking for a reaction, that is why I have this whole zone as my POI, right? That's why I have this whole zone as my POI. So if market come back to this zone, give us a reaction, then we look forward by run from here the upside, majorly this imbalance, majorly that imbalance. So that is our major zone, and we understand as of from last week, market has not given us what any strong strength that much. So we have a strength to the downside right here, consolidation right here, have like a little manipulation. Then we also have now another consolidation. So this consolidation happened, we have this manipulation. Expected what a sharp distribution to the downside to make a lower low, but market did not do that. So what we have another consolidation. This can means that what we have what a manipulation to the downside before expansion the upside on USD card. Now we have USD chef right here. We have engulfing plus imbalance. So I have this zone. If market will buy, and buy from here. If not, if we break this low plus engulfing, then I'm in aligning, then I will look forward to sell program. So that means this low right here is my what major low. So I'm waiting for market to engulf that particular low. So we also have this right here, which is USD JPY. Market broke structure to the upside right here. That is the first thing. Broke, it creates a new higher high, but this higher high right here was not engulfed, making this low liquidity inducement low. So this low right here is clearly inducement. Sorry. All right. So this low right here is clearly inducement low right here. So having that as inducement low, then we have what base candle or a hidden base right here. So we have a hidden base right here. So we have this hidden base. Next thing you expect of price is that this hidden base can hold price up. All right. So we have hidden base right here. So when you scale into what 1 hour time frame, that hidden base will become a candle, become internal structure. Then we also have mitigated zone right here. You can see this two zone still mitigated. That means you can also watch out within these two zones or within these two lows right here. So watch out at that low. So you can also watch out these lows right here. So coming back on this time frame, you will see on that 4 hour time frame, it's a long week. All right, it's a long week. So you scale into what maybe 15 minutes time frame. 15 minutes time frame. This was a buy and now 15 minutes time frame. We can't see the major imbalance. So on 15 minutes time frame, it makes more sense now that we have imbalance, right? We have this huge imbalance right here, right? We have our resistance, sorry, our support level, which is this line. So that means we can pick this imbalance right here plus this last mitigation. Now, the reason why you call this the last mitigation is because this mitigate this support level, this mitigate this. You can see that clearly. All right, there's a proper mitigation right here. So this makes sense that we mark this area now as our point of interest or as our refined zone. So if you don't want to refine, you can put it like I there on. If you want to refine, it will be this. Reason why is because of that word clear balance. So this makes more sense now that you're looking for this word clear as what. But have it in mind also that I said something. This being a liquidity first, that is the first thing. But at the same time, these lows right here are unmitigated. That means you're not only trading this POY, you are waiting for what? A confirmation. So this structural low still remain structural range low. Now coming back for that 1 hour time frame also. So we'll have this, you see this mitigation right here. This mitigation right here. I'll have this short-term QML. All right, this short-term QML right here. Okay, so we have the support level right here. So if one is to buy, if I'm to maybe set a limit order without waiting for confirmation, I won't buy from here. So where I will buy from, majorly this imbalance right here. This is where I'll set my my limit order. So this first zone is just for my POI. My major zone will be this, and my stop loss will be this. This will be my major zone. My stop loss will be this. This will be my zone. Then just target this high. This would be right. This is liquidity, internal structure, mitigated internal structure. So making this area kind of like a strong POI because of liquidity. That is the reason why it's a strong POI, because it has a liquidity right below it. Then this is the major point of interest if anyone wants to take the trade as a major trade. So let me just rephrase it now and make it what it should be. So this is liquidity right here is your short-term imbalance. All right, but that does not mean you overlook this area. You are waiting for what information within that area. So this makes this that this become your interest. Now, since this is the last mitigated zone within this structural range, right? So that is why I pick this major zone right here. So once I have this zone, I'll wait for market to come back to this area. If align with timing, market get to this area, align with timing, then I will buy. If it didn't align with timing, I wait for the confirmation that align with timing before I look for a program within this zone. So that is all on this major USD pairs, and that is how I pick my point of interest and the outlook for this week. So the reason why I'm still bullish on this is because what Friday was bullish, so I'm expecting what Monday/Tuesday to also be bullish before if market will form the high of the week before a sell or continuation the upside, because market reject this what support level right here also. So that is what a good rejection that market can what use to give us what a bullish expansion. So let's look at code report. Code report. Let's start with Australian dollar. So Australian dollar, we noticed as of last week, they added what a lot of position, 7,000 position. So what from what 58 to what 54. This shows that what buyers now are what becoming stronger in the market. Buyers are becoming stronger in the market. So having that in mind, that buyers now are becoming stronger in the market, this shows that AUD is strong. AUD now is what is strong pair to what to trade within this coming week. Canadian dollar at the same time, we understood that what Canadian dollar they closed what minus 16,000 positions or contracts, right? Short position or short contract. They closed what 16,000 of it. But at the same time, the buyers on Canadian dollar did not add much order. So that means add strong but not super strong. All right. CAD is strong but it's not super strong. But at the same time, we went from what minus the 3,000 to what 67,000. That's a huge difference. So that shows that what Canadian dollar is little bit what gaining strength over and over again. So that is what sellers are still what in control on Canadian buyers are still in control, am I to say. So it is moving from sell side to what buy side. So on the Canadian dollar. So since we have that, that means pairs like USD card will likely give us what I will likely see lower lows if possible. But at the same time, just like I said, it is not what super strong. So if we have what if aftermarket did this, if you had more contract on the buy side, then I would have what expected us to sell off next week without expecting those buy zones to hold. So that is that. We have what Swiss francs when market close about 3,000 positions. So minus 30K, 8K minus 25K. So that this also shows that what Swiss francs is gaining strength gradually again, is gaining strength gradually again. But currently, the structure on USD chef is still bullish. So until market would show us that what sellers now are ready, we will continue buying. Same thing with Arrow. Arrow is what gaining strength also. So one from what? Okay, as of last week, Arrow they added more sell position. So that means Arrow was not super strong as of last week. But at the same time, uh, it is not super weak because we are still within the 67 or 60K, right? We are still within 60K. So we only went from what? 67 to 65K, right? Arrow is still strong, but not super strong, which is why I'm still what? On I'm still in line with this buy program. So that means this zone till my zone. If market give us what? A reason to buy this zone, still my zone, I will look for a buy program. So British pound sterling, same thing. One from what? 17,000, 6,000, now to what? 20,000. Still that what? JPB is gaining strength again. JPB is what? Gaining strength again. Because with the close what? 5,000 position, at the same time, they added what? 8,000 position. That means British pounds is gaining strength again. This shows that what British pounds is gaining strength. So British pounds is gaining strength. On the last 3 weeks, it is not that what consistent, all right? It's not that consistent, but as of last week, it shows what stronger strength on the British pounds. So the same thing on good. They added what 14,000 and they closed 2,000 short long position. This means that what good is still what sellers are now jumping into the market, and which is why we had that sell move as of last week. But based on what is happening around Pakistan and India, with that little fundamental news, even if that will not, even if a war will not hold, that can also affect good. So a lot of people will buy more good. So a lot of people will buy more good. Now the reason why good gained a little very strength as of last week was because we thought that the war between Ukraine and Russia, we have a common solution, but it's looking likely that the solution will take a little bit longer. With what is happening in India now, gold will continue the bullish expansion. So that is why I'm expecting this bullish continuation from this zone right here, the side. So that is all for this week. That is all for this week. That is all for the quote report. So this is a Japanese yen right here. Japanese yen is gaining strength, but currently technical analysis is still what on the buy side. So that is all for today. Good luck and good trading to you all.